Welcome back to the channel. I'm Algabot, your guide to the mechanics behind automated trading systems. Today we're breaking down an expert advisor for MetaTrader 5 called Stop Hunt FVG Reversal. This is a pure price action strategy, which means it uses no traditional indicators at all. Instead, it reads raw candle geometry. It hunts for the moment when price spikes through a recent high or low to trigger resting stop orders, and then reverses sharply. By the end of this video, you'll understand exactly how it spots that trap, how it times its entry, and how it manages risk. Let's get started. Let's start with the big picture. Stop Hunt FVG Reversal is built around a single, well-known idea in price action trading. The theory is that large institutional players, often called smart money, need liquidity to fill their orders. The easiest place to find that liquidity is right below a recent swing low or right above a recent swing high, where retail traders cluster their stop-loss orders. So price gets pushed through that level, those stops get triggered, and then the market reverses violently in the opposite direction. This strategy tries to detect that exact sequence and join the reversal. It does this with two ingredients working together. The first ingredient is the liquidity sweep itself, where a candle pierces beyond a recent extreme. The second ingredient is the fair value gap, often shortened to FVG. A fair value gap is an imbalance left behind by a fast, one-sided move. When a candle displaces so violently that the surrounding candles never overlap, it leaves a small price gap that the market often returns to fill. Because this is a pure candle geometry approach, there are no moving averages, no oscillators, and no lagging indicators anywhere in the logic. Everything is measured directly from the open, high, low, and close of each bar, plus the swing levels around them. That makes it time frame agnostic, so it can be applied to the chart period of your choice for study. In terms of who this style suits, it tends to appeal to traders who already think in terms of market structure, liquidity, and supply and demand, rather than indicator crossovers. It only ever holds one position at a time, and every trade carries a predefined stop and a fixed reward-to-risk target. Remember, throughout this video we are studying how the code behaves. This is for educational purposes only, and nothing here is financial advice or a promise of any particular result. Now let's walk through the exact logic, step by step. The strategy only acts on the first tick of each new bar, so it always works with fully closed candles. Each time a bar closes, the EA looks at the three newest candles, which we'll call Candle 1, Candle 2, and Candle 3, and it measures a reference swing window of bars immediately before them. The size of that window is set by the SweepLookback parameter, which defaults to 10 bars. Inside that window, the strategy records the lowest low and the highest high, and it calculates the average candle body size. This average matters because of the next check. The middle candle of the trio, Candle 2, must be a true displacement candle. The strategy detects this when Candle 2's body is at least the displacement multiple value, defaulting to 1.6 times that average body. In plain terms, Candle 2 has to be dramatically bigger than what the market has been doing recently. Next comes the gap. For a long setup, the strategy detects a bullish fair value gap when Candle 3's low is still above Candle 1's high, leaving clean air between them, and Candle 2 closed higher than it opened. For a short setup, it's the mirror image. Candle 3's high sits below Candle 1's low, and Candle 2 closed lower than it opened. But the gap alone is not enough. The sweep must come first. For a long, the lowest low across Candle 1 and Candle 2 has to dip below the reference swing low, proving that sell-side stops were rated. For a short, the highest high must poke above the reference swing high. Only when both the sweep and the gap line up does the EA arm the setup. Once armed, the strategy waits patiently. It does not enter immediately. It waits for price to retrace back into the gap zone. A long fires when a later candle's low dips into the bullish gap. A short fires when a later candle's high pushes up into the bearish gap. If price instead closes beyond the swept extreme, the trap is considered failed and the setup is discarded. Setups also expire after SetupExpiryBars, which defaults to 6 bars, so stale signals don't linger. When a trade triggers, the stop-loss is placed just beyond the swept extreme, where the trap was set, and the take profit is a fixed multiple of that risk, governed by the RewardRisk parameter, defaulting to 2. Let's read through the actual meta editor code on screen. At the top are the input parameters that you, the user, can tune in the strategy tester. SweepLookback sets how many bars back the EA scans to define the swing high and low, so a larger value demands a deeper, more significant level to be swept. Displacement multiple controls how explosive the middle candle must be relative to the recent average body. Raise it and you demand stronger, rarer displacement. Lower it and signals become more frequent but looser. RewardRisk is the multiple used to set the take profit against the measured risk. SetupExpiryBars decides how long an armed signal stays alive before it's abandoned, and lots is the fixed trade size. Now the signal logic. In the first block, the EA is already armed for a long, shown by G_DIR being greater than 0. It reads the latest closed candle. If that candle's close drops below G_prot, the swept extreme, the trap is judged to have failed and the setup is marked dead. Otherwise, if the candle's low dips to or below G_gap upper, price has retraced into the gap and interlong fires the buy. The second block is where a fresh long is detected. The condition C3L greater than C1H confirms the fair value gap, candle 3's low sitting above candle 1's high, while C2C greater than C2O confirms the displacement candle closed bullish. Then pattern low, the lowest low of the first two candles, must be below reflow, proving the sweep happened first. When all of that is true, the EA stores the gap bounds and the protective level and arms the setup. Let's walk through this illustration from left to right. Notice there is no oscillator panel here, because this strategy reads pure price action. On the left, the early candles carve out a swing low, marked by the lower dashed line. Then watch candle 4. Its wick spikes down through that swing low, sweeping the resting sell stops beneath it. That is the stop hunt. Immediately after, a powerful bullish displacement candle fires upward, so strong that it leaves a clean fair value gap, shown as the green shaded zone. Price doesn't run away just yet. A couple of candles later it retraces gently back down into that green gap, and this is where the buy entry triggers. The protective stop sits just below the swept low. From there, price lifts away and reaches the take profit, a fixed multiple of the risk, marked higher up. Now the market gives us the mirror image. Those rising candles build a fresh swing high, marked by the upper dashed line. Candle 10 spikes up through it, sweeping the buy stops resting above. Then a heavy bearish displacement candle slams downward and prints a bearish fair value gap, the red shaded zone. Price drifts back up into that red gap, and the sell entry triggers, with its stop placed just above the swept high. Price then rolls over and falls into the take profit below. So in one chart you've seen both halves of the engine: sweep, gap, retrace, and a defined exit, long and short. This is a simplified illustration for learning only. So that's Stop Hunt FVG Reversal from top to bottom. We covered the core idea of a liquidity sweep feeding into a fair value gap, the step-by-step entry logic, the way the code arms a setup and waits for the retrace, and how the stop loss and take profit are calculated. We also walked a chart through both a long and a short example. Remember, everything here is educational content designed to help you understand how this expert advisor thinks. It is not financial advice, and nothing in this video is a recommendation to trade. If you found this breakdown useful, please hit the like button, subscribe for more MetaTrader 5 strategy analyses, and drop your questions or strategy requests in the comments. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.